Now we're joined by Macroeconomist Dr OluwabePelumi Osode to discuss this. Thank you so much, Dr. Osode, for joining us.
Thank you for having me. Good morning.
Good morning to you too. Now, what are your thoughts on the recent decline in Nigeria's inflation rate, and how significant would you say this is to the development for the country's economy?
Yes, so first off, I won't call it a decline in inflation rate actually. I would rather see it as a change in the inflation rate. And the reason is because the fundamentals or the how the inflation basket is computed has changed. So we are not seeing a decline from 34.8% to 24%. That's not what we are seeing. We are seeing a change in the inflation rate because the fundamentals have changed. And like we said, the base year has changed to 2024. The constitute or the items in the basket has also increased. Some obsolete items have been removed, while the more recent and more reflective items are added. Now we've moved from 740 items to about 934 items. The same thing happens to the weighting. The weighting is also more reflective of economic reality, and that is why we are seeing this decline. And of course, the first thing that will come to play is the base effect between 2024 and 2025. That was why we saw this 10% decline. And what this means is that, first off, it's more reflective of economic realities. Then secondly, it would improve our investors' confidence in the economy. Now that we have rebased the CPI, which is a major macroeconomic indicator used for policy making and a major indicator of seeing how sound the economy is. Now that that is in place in terms of more recent and more reflective assumptions, then we can see this boost investment confidence and see how we attract investment in that angle. So more in policy sense, it's really a good effort. But to the real sector or to the man on the street, there is just a change in number. Nothing has really changed in terms of the prices of goods and services.
But how does this dropping inflation rate affect the everyday Nigerian, especially in terms of the affordability of food and the general cost of living?
Like I rightly said, this is more like a number. The word on the street is, even if inflation number is now 24% or even goes down to like 15% as the federal government is assuming towards the end of the year, the word on the street is, how does this affect food and prices of foods and services? How does this affect the price of tomatoes in the market? Does this mean that my salary is enough for a family of 4 or 5? Does it mean that I can save now from what I have? That's the most important thing. And I will tell you that as much as this inflation number is reflective of reality and the fact that the assumptions are better given the consumption pattern and the fact that it's also data driven, the reality is still the same. In terms of the prices of goods and services, the prices have not gone down. And but the most important thing now to look at for consumers is actually what we call inflation expectation. There is general optimism in the market now. Everyone is optimistic to see inflation come down to at least 20% because the sentiment in the market is now positive. Unlike what we had earlier in 2023 and 2024, where there was a negative sentiment and everyone is placing premium on whatever goods and services they are trading in. But now we are seeing this positive outlook and looking at also factors that are driving inflation, both food and the more core factors, exchange rate dynamics. We are seeing more stability in exchange rate market, given the intervention from the CBN, and also the fact that some of these commodities, global commodity prices are likely to trend downwards, looking at the geopolitical tension that is easing globally. So those factors will also adding to the expectation that is well anchored and more optimistic expectations. So we expect that begin to see the impact of prices of food and services trade downwards.
Okay, Dr. Osode, thank you so much for joining us to discuss very pivotal conversation. We appreciate your time with us on the news.